You applied for a business loan, you waited weeks, and then you got the email, denied. And the worst part, they barely told you why. If that sounds familiar, you're not alone. Most small business owners get denied not because their business is bad, but because nobody ever taught them what lenders actually need to see. And that's exactly what this channel is going to fix. I'm going to break down the real reasons small business loans get denied, the stuff lenders see on the inside that nobody talks about publicly. I work in small business lending. I've seen what happens on both sides of a loan application. I've seen borrowers who had great businesses get denied because of things they could have easily fixed if they'd just known what to look for. So I started this channel, From Denied to Funded, to give small business owners the inside knowledge that most lenders keep to themselves. Reason 1. Your credit tells a story lenders don't like. It's not just your score. Lenders look at your payment history, how much of your credit you're using, and whether you have any collections or judgments. A 650 score with maxed out cards is very different from a 650 score with clean history. We'll do a whole video on this, but know that your credit is a story, not just a number. Reason 2. Your time in business is too short. Most lenders, especially banks, want to see at least 2 years in business. Why? Because the first 2 years is when most businesses fail. If you're under that threshold, don't give up. There are lenders built specifically for newer businesses, and we'll talk about those. Reason 3. Your revenue doesn't support the loan amount. Lenders look at something called debt service coverage. Basically, does your business make enough money to pay back this loan and still operate? If you're asking for $100K but your business only brings in $50K a year, the numbers don't work. Knowing what you can realistically qualify for before you apply saves you a hard inquiry and a denial on your record. Reason 4. Your financials are a mess. No bank statements, no tax returns, mixing personal and business expenses. These are instant red flags. Lenders need to see clean, organized financials to trust that you can manage money. This is one of the most fixable problems, and one of the most common. Reason 5. You applied to the wrong lender. This is the one nobody talks about. A big bank is not your only option, and for a lot of small business owners, especially newer businesses or those in underserved communities, a traditional bank may never say yes. There are CDFIs, Community Development Financial Institutions, that exist specifically to fund businesses like yours. We're going to talk a lot about those on this channel. Here's the thing, none of these reasons mean your business can't get funded. They just mean you weren't loan ready yet. And loan ready is something you can become. That's what this channel is about. Every video I put out is going to give you something specific and actionable to get closer to a yes. If this was helpful, subscribe, because we're just getting started. Next video I'm going to walk you through exactly what lenders look at before they even read your application. You don't want to miss it.